What's up, everybody? It's your boy J. I'm back with another video. And today I'm going to be going over a specific strategy that's called the break and retest strategy. And how you're going to be able to actually go ahead and profit on a day-to-day basis within this particular strategy. Okay, so right now what I'm on is something that's called TradingView. Okay, so with TradingView, this is not necessarily where you actually go ahead and enter your trades, but this is where you actually go ahead and mark up the chart, okay, to create an analysis to where you believe that the market will go. Okay, and now we're going to basically go ahead and practice, and I'm going to show you guys how you're going to be able to utilize this break and retest strategy. So what we're on right now is a currency pair that's called XAUUSD, and what that stands for, that is gold. Okay, so within the foreign exchange market, you're actually able to trade, as you can see if you look to this right, able to trade metals, crypto. You're able to trade currency pairs, stocks, and all different variety of things. Okay, so with gold, as you can see, gold spot US dollar. So let's say the market is going up for gold. That means gold, the value of gold, is stronger than the US dollar. Now, if the gold market is going down, that means gold is weaker than the US dollar at these particular moments. Okay, and what you're able to do is you're able to actually go ahead and profit off of these markets. And how you're going to be able to do that is with the break and retest strategy. Okay, so the first thing that you need to do is, all right, what we're on is we're on the 1 hour time frame. So if you take a look, we're in a 1 hour time frame. Okay, and what that means is every single candlestick, right, every green, red candlestick that you see shows an hour of price within the gold market. Okay, so now the first thing that we want to do is we want to actually go ahead and create something that's called support and resistance. Okay, so now for support within the foreign exchange market, and probably just about almost every single market, it acts as a floor in the market. So there are particular areas and times where price will come in the market and it will just repeatedly test off of specific zones, levels, areas, and stuff like that. And we like to call those support areas. So now, the next thing that is very, very important that you're going to need to know is called resistance. So what resistance within the markets, it acts as a ceiling. So there might be a particular time where the market comes to a particular area and resists off of it. Okay, resists off of it. And then now, one thing that you're going to be able to identify and notice is that if either a support or a resistance is broken, it can actually act as one another. So for example, if you have a break in support, now that most recent support level that is broken can now be attached or enacted as a resistance. Then now let's say we have a resistance that's broken. Now essentially what can happen is that resistance can now act as a new support, if that makes sense. So I'm just going to give you guys and show you guys a little bit more and give you a little bit more idea of how this actually works. Okay, so now the first thing we need to do is mark support. So how are you going to be able to actually go ahead and identify support in the market? So if you look over here, we're going to use one of these tools, which is a rectangle. So with this rectangle, what you're able to do is, for support and resistance, you want to see where price have made multiple taps or have reacted within a certain area. So just to give you an example, let's just say this area right here. Okay, this area right here. And now this is honestly also a cheat code on how you can actually go ahead and extend your boxes and your zones all the way without having to physically do it. You just go to coordinates, put minus 1 0 0 0 0 0, then 1 0 0 0 0 0, like this. All right, and then now you can see that support level will actually go ahead and extend across that box. Will extend across the whole screen. Okay, so now how do I know that this is a support level? So I'm going to go ahead and take this circle. As you can see, every time price came to this area, to this zone, to this support level, it made some kind of reaction. So what do I mean by some kind of reaction? So it acted as a floor, and then it went ahead and reacted and made a move off of it. So that's one. So you can see this made this move up. So that's one tap. It came back and touched this area again. Then now what happened? Another move up. Now even later, it came and touched the zone, this area again. So as you can see, this is a very strong area within the market. What that means is every time, all right, the market and price comes to this support zone, there's a shift, okay, in the opposite direction. So that basically shows me and confirms that this is a very, very strong support. All right. So let's mark up a couple more of these. All right, cool. So as you can see, every time the market went ahead and touched this area, okay, it made a support and it went the opposite direction. And why? Essentially, what is it doing? It's acting as a floor, okay? Acting as a floor within the market. So now, the next thing I'm going to show you is a resistance. So now we're going to go ahead, take our rectangle again, and I can see a resistance. And as you're going along and keep going, you're going to be able to see these like easily. So this right here, I see this as a resistance area. So let's go ahead, do the same thing. All right. So now we have that as a resistance area. So now how do I know that this is a resistance area? So as you can see within the market for resistances, okay, it acts as a ceiling within the market. So now, okay, so this support area, right, you can see there was movement up. Now what happened? It created a resistance at this area right here. And what happened? It made a shift in the opposite direction. Boom, right? So now we also have another tap in that same resistance area. So look, you can see another tap. I could just clone these. Another tap. Another tap. So you can see every time the market came to this resistance area, it made a shift in the opposite direction. So look, shift, shift. So this is how I'm able to identify, okay, certain supports. So you can see this is acting as a floor, and then certain resistances within the market, okay? So that's the first thing that you want to do is identify support and resistance within these markets. So you can see every time the market came and touched this level, it went the opposite direction. Every time it came to this resistance, it came back the opposite way. So now, going back to what I said earlier is sometimes previous supports can act as a new resistance and previous resistances can act as a new support. So now let's say, for example, okay, you see price came down here, tapped the support, and price went up and broke through this resistance. Broke through this resistance. So now after price went ahead and broke through this resistance, the next thing that we want to wait for is price to come down and retest, okay, these particular areas, these particular zones. So you can see we have a wick here. Okay, so sometimes price may not come 100% and retest it, but it's very, very close. And I'm going to show you guys how you're going to be able to actually enter when price actually does come down and retrace. So now we have this break. Now we have this retest. Okay, we have this retest. Even if we go here a little bit higher, all right, we have this retest of this area. So now the next thing we want to do is we want to find an entry. Okay, so now after the market breaks a particular support or resistance, we want to wait for it to come back and retest. So we don't want to enter here, we don't want to enter here, we want to enter here. We want to see the market make some type of retracement, some type of pullback into the recent support or resistance that it just broke. So now for entry model, how do we enter? So now basically how we're going to enter is we're going to enter and we're going to look at major levels that happen in the market. Okay, major levels that happen in the market. So now for entry, okay, we're going to look at reactions off of $25 levels within the market. All right, so now this is also, we want to make sure the retest is complete. Once retest is complete. Okay, so now for entry, once the retest, okay, in other words, is somewhat complete, we want to look at reactions off of the $25 levels within the market. So if you see these little vertical lines that I have on my chart, these mark every $25 within the gold market. And one thing that I noticed is that gold tends to react off of $25 levels, and in other words, uses confluence. So now we have our recent resistance, which is now our support, and then now we're able to leverage, okay, rejections off of these $25 levels. So now let's say, for example, okay, we're waiting. Example of a rejection, okay? So now I'm going to show you guys an example of the rejection. This right here is one example of a rejection off of the level. All right, so this right here is honestly an A+ trade. So now let's just backtrack a little bit. So we had these supports, we had these resistances, price broke up, came back to recess. Now we're going to be basically looking for a reaction or rejection off of one of these quarter point levels. So you can see we have this level right here, which is 44.75. So as you can see, price makes a move down, a shift down, and then comes back and reacts and closes back around, back above this level. Okay, so now after this particular rejection, we're gonna have our stop just below that wick. Then now for take profit and stop loss. So now after price went ahead and made this rejection off of this level right here, this right here is 44.50, also came close to 44.50 level. So you can see every single level that's marked up is every $25. So this is 44.50, 44.75, 4,500, so on and so forth. So as you can see, the price, like I said, came back, created this green bullish rejection candle. So now once that closes, okay, now we're actually able to go ahead into the market. So now for my take profits and stop losses, my stop loss is going to be right below this wick, and my take profit one could essentially be the next quarter point. So I know that if there's a rejection off a specific quarter point within the market, within the $25 level, it essentially has a high probability chance of going to the next one. So right here, this level 44.75, okay, we will actually go ahead and enter at this level. And as you can see, take profit one went to 4,500. Okay, and now take profit two, 45.25. So as you can see, it's going up in increments. All right, so that's like as I told you, this right here, this essentially went up around 1,500 pips. And you would have been able to actually go ahead and catch this trade, okay, within this market by simply using support, resistance, and then now for your entry, looking for rejections and reactions off of quarter point levels. So now, essentially what could have happened is you could have actually went ahead and took this trade with myself and my free community live, okay? So all you have to essentially do is go and click the link to the description below and join the Telegram. And now once you're in the Telegram, all you have to do is follow the steps. You'll get access to free education, free videos, you'll get access to free signals. But all you have to do is join the Telegram, okay, and follow the pin message. So look, guys, this is, a very, very powerful strategy that you'll be able to utilize within a market. And you're going to be able to make money with this particular strategy, whether the market goes up or down. But all you have to essentially do is study, 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 okay? One thing that I learned when it comes about trading is all about repetition. So look, guys, that's going to conclude for this particular video. See you guys in the next one. Peace.